Assalamualaikum and hello everyone. Welcome to my channel. Today I'm going to discuss question 3, February 2015 from the common test topic 3, which is on MFRS 116 property, plant and equipment. And this is for the course code FAR210 financial accounting 3. So let's start. Okay, here's the information. Centrelink Berhad, which was incorporated on 1st of January 2000 X3, is a storage and transportation service company. So that is the principal activities of the company, which is they are a storage and transportation service company. They own a land and a building, motor vehicles to provide transportation service. So this is actually the purpose of the motor vehicle, which is to provide transportation service, and therefore motor vehicle is providing a supply of service, and the land and building is providing the so-called warehouse handling. So that is what happened. 1st of March 2000 X3, Centrelink Berhad had imported several trucks. So you have the truck to be used in business operation. So what was the business operation? This is the business operation here, the one here, that is to provide transportation service. So this is the business operation or the primary business activity. The trucks were delivered. So what you purchase is that the trucks, right? They had imported several trucks, and this is the asset. We have to check whether it is an asset, and later maybe we need to check whether it is under the item of PPE. Trucks were delivered. So it was being delivered, meaning that you import the truck and the truck were delivered. So the day that you receive the truck, and that is in its proper working condition, intended for what the management wants it to be used for. So this is actually the date of acquisition, which is the date of initial recognition. See, so these are the costs incurred. Invoice price of trucks. So it's trucks, meaning that not one truck, but all the trucks. The invoice price was 450,000. So this one is part of the cost that must be capitalized, and this must be included in the initial cost. So you will capitalize. Import duties. So invoice price is your purchase price. Import duties that are part of directly attributable costs, right? They also need to be capitalized. So import duties, they are directly attributable costs. Delivery and transport costs, which is maybe to transport the trucks from where you imported it. Maybe you use some, a few ships to deliver the truck, right? It was imported. So that is also part of directly attributable cost. So that must be capitalized. So it will include in the initial costs. Insurance on shipment. So this is to ensure the delivery of the trucks were safe and sound. So you have the insurance that you have to pay, for that the first time it was being delivered. So this will be capitalized because these are all directly attributable costs. So it will be part of your initial cost. The word here you can see general and admin costs. So that is an expense, right? Which is your expenses. So this one will not be capitalized. So you will not include, and this is going to be expense off. So you will exclude. Road tax and insurance. This is the first time that you pay for the road tax and you spend for the insurance. If it's the first time, that will be capitalized. But if you keep on repeating paying the road tax every year, paying the insurance premium every year, that is by nature not a capital expenditure, but those expenses are revenue expenditure. Exchange loss. Maybe you import and you have incurred some foreign exchange loss. So this one also will be expense of. Road tax will have to be capitalized. So these are the things expense of excluded. So these are the things that you will include, the one that I put a tick here. And if you total them up, you will straight away get the total of the initial costs, if that is the requirement. But you must read the requirement. In this information, you have the company that depreciate, so the depreciation policy. So before that, 20% is the rate per annum. The word per annum shows you the basis using reducing balance method. So this one is showing you the depreciation method. And the truck, and you are also informed. So this one was not the basis. I got it wrong. This is the basis. Yeah. Monthly basis. So this is the basis. Monthly, not yearly. Monthly. The trucks are expected to be used for 10 years. So this is the expected useful life. And Centrelink close its books every 31st of December. So this is the current or the financial year end, or the reporting date of the company. Okay. Let's see what you are asked to do. Okay. Requirement A. Explain whether the trucks, you are asked to explain whether the trucks are the property, plant and equipment. Is the item truck, those trucks are items of PPE. So if you want to see that happen, you need to make sure that it meets the definition of PPE, which is talking about this tangible item. Tangible item means it has physical form, physical structure, physical existence, and also it was used for production or supply of goods or supply of service or rental to others or for admin or for maintenance use. So it was used for any of this purpose, right? And the last one is that it must be expected to be used for more than 1 year. So if fulfill these three characteristics, then only it is a PPE. So let's see whether the trucks satisfy or not those characteristics. So does it has the so-called tangible item or the so-called physical form? Yes, it is, because it is, the trucks are made of steel, made of maybe metal, right? So those are made of wheels, right? And it is held for supply of service. Remember, the supply of service made by the company is to provide transportation service. You don't supply goods, but you provide services to other company, right? So these are given separate marks, right? So these are for 4 marks. The next part is that it fulfills the third characteristic, which is to expect it to be used for more than 10 years. So if you recall in your question, that was 10 years, right? So 10 years, which is more than one period or more than 1 year. So you have already answered requirement A, proving that the truck is an item of PPE. Next one, you asked to calculate. The word calculate means to compute or to actually estimate. You cannot give this answer if you are asked to explain the initial cost, but you have been asked here to not to explain but to calculate what are the amount, or what are the so-called amount, or how much is the cost that you will have to incur on the start of the use of the truck. Okay, you have already decided this earlier, right? This 6 item, and therefore I've already justified that these are the initial costs. Initial cost means cost incurred on the date of initial recognition, on the date the asset is ready for its intended use. Okay, if you were to do the journal entry for this, if let's say a question asks you to do journal entry, so you will debit truck, which is your motor vehicle, the PPE, and you will credit bank if this is purchased using cash. How much? 470 if this is required, but this is not required. This is just for revision. Compute depreciation expense. Remember, we purchased the truck. When did we purchase the truck? Go back to the question. 1st of January? No. 1st of March? No. But it is purchased. Let me just show you the date, a different color. It is purchased here, 1st of October. Why? It was the date. This is the key word, the date that it was being delivered. So from 1st of October X3 up till 31st of December X3, this is 3 months. So since you use monthly basis for depreciation, that monthly basis, you need to provide depreciation according to the month of ownership. So that 470,000 should refer to cost minus to cost, right? Because this one is what was it? It was reducing balance method. So for the reducing balance method, in the first year, let me make another recap for you. The percentage should be based on cost the first year. In the second year onwards, or subsequent year, up and onwards, right? This should be based on percentage on the carrying amount. And the carrying amount is actually cost minus accumulated depreciation. So you are not asked to calculate depreciation on the second and subsequent year. You are asked to calculate depreciation for the first year, 31st of December. So from 1st of October X3 up till 31st of December X3 for 3 months. The rate is 20% times 3 over 12 times 470,000 is this. And this is the answer. In terms of journal entry, if you want to know, this is debit depreciation for truck. In that year, 23,500 for this year. And credit, if you are asked to do this, accumulated depreciation for truck, how much? 23. Okay, next question. You are asked to define estimated useful life. Okay, if you can still recall the definition of depreciation, it is about allocation of cost over its estimated useful life. Allocation of cost of asset over its estimated useful life on a systematic basis. Estimated useful life, if it's on a systematic basis, but this is part of the definition, that is depreciation. So now the question is asking you not about depreciation, but only asking you about the term estimated useful life. Okay, that was what being asked. So I will erase this. Okay, what will be your answer then? Then you need to go and define what is estimated useful life. Not only that, you are also asked to give two factors, right? What are the two factors that affect the estimated useful life of the company? Okay, let's look at the answer. So the answer for part C, to define that, right? Estimated useful life is the expected utility, or you may use the term expected usage of the asset to the entity. Yeah, that is determined either by the time period. Sometimes you determine by how long, let's say 10 years in this question, over which the asset is expected to be available, meaning that the asset can still be operated, we can still make use of the asset, sometimes based on the time period, right, or the number of years, or sometimes that is based on the number of production. Let's say a machine can produce just a maximum of 10 million units, so meaning that the useful life of the machine is up till the production of a 10 million units, right? So that is expected to be obtained from the asset. So that one is about having the expected usage of the asset, determined by either time period or by either the number of production that the asset is expected to be able to produce. Two factors that affect depreciation. There are actually four factors so that affect the life of a PPE that was provided in the MFRS 116. But let us just take two out of that. Physical factors. You are just asked to just state. State means you do not have to explain. Physical factors due to fair wear and tear. Technological factors due to the fast or the very rapid move in technology. Economic factors maybe due to the demand and supply. Demand, for example, maybe the shorter will be the life of the asset, or the legal factors, the policy of the government, the so-called acts or whatever rules and regulation of a country or pertaining to that asset. For example, a car. In certain countries, only cars below 10 years are allowed to be on the road. Next, this is part D. Part D is asking, is another theory question. Yeah. Part D. Okay, what is it? So you are informed Centrelink had incurred cost of 150,000 to extend the building. Why do they need to extend the building? Because they want to cater the increase for the demand for the storage services. So they provide storage services. So if they incur that 150,000 cost, this extension cost will provide company with more spaces. So meaning that you will be able to have an improved capacity of the storage of the company. So that was actually trying to see whether or not there is going to meet the recognition criteria for subsequent costs. We need to check on that. So here, one of the criteria is, it says, can be increase in useful life, increase in output or capacity. So I put here quantity, which is output. Another one, increase in quality, no increase in output but better product. And the last one is reduction in the costs or operating costs. So if you have any of these four attributes, it might have increased the asset in terms of value. Here it was able to increase the storage, so increase the capacity. Right, next one, the company incurred repair and maintenance costs. Repair and maintenance, no information saying whatsoever. So you assume this one did not increase the future economic benefit of the building, meaning that this is nothing to do with increasing the value, nothing to do with that. So that was a cost of 8,000. So on 31st of December itself, the company had revalued its land. So this has something to do with revaluation model, which is what you learn from your part D of the notes, right? Let's see what you have here. Required, you are asked to explain the accounting treatment on the subsequent costs. So these two items, 150,000 and 8,000, they are your subsequent costs. You are asked to explain that. So before that, let us just recall, make some kind of revision here. What is subsequent costs? So if you can still recall, subsequent costs are the costs or additional costs or further costs or further expenditure that you incurred over the asset useful life. So let's say the asset useful life is 10 years. Throughout that 10 years period, you incur the costs after the initial recognition. After initial recognition, meaning that after you determine the initial costs, after you have decided that there is a PPE, so there are some other costs that need to be incurred, that is subsequent costs over the life of the asset. So if you look at the first part, this one is related to the extension of the land. So if you can still recall, whatever that increase the four characteristic or attributes that I mentioned earlier, increase in useful life, increase in capacity or the output or the storage in our case here, increase in the quality of the service, better space, for example, more spaces. And next one is also reduction in the cost significantly, the operating cost. Here is not the case. The case is that it provides extension. So what is the accounting treatment? That one, since it provides more spaces, that means that they increase the future benefits. And that future benefits is being increased from the originally standard of performance, the assessed standard. So therefore, if this is the case, the cost will be capitalized and added as part of the cost of the asset, the cost of a building. And that is considered as a capital expenditure. And it will be shown in the statement of financial position. In contrast, the repair and maintenance cost for the truck that you incur, it does not increase the future benefits. You just incurred it. If nothing is being mentioned, that was just to maintain. So when maintain means just to ensure that the trucks are operating in just its proper working condition. If that is the case, it does not fulfill the recognition criteria to be added to the cost of the asset. So this cost is a revenue expenditure, and therefore it will be treated as an expense in the SOPL. SOPL here means SOPL in the year you incur it, which is in somewhere in 2004. Okay, the next part of the question asks you to discuss the accounting treatment for revaluation of land. So for the land, right, for the land, you should look at earlier you are informed that, wait, let me check back. Okay, the building, yep, originally they incur to extend the building. Which building? We are talking about the building here that you have here. Okay, so let's see the question. Okay, so revaluation of the land provided, let's see what are the information given. In your case, first find out what are the carrying amount of the land. Carrying amount of the land is at cost, right? At cost. It is 250,000, right? And you can check the information given in the question. Okay, where is it? I'm trying to get that for you. Okay, here the cost of the land is 250,000, and now the fair value is also known as the market price. Okay, the market value of the land. The cost here is the initial cost. So if you look at that information, you'll be able to see that fair value are more than the cost or the so-called carrying amount, right? So therefore, since the fair value, which is 350,000, is more than the carrying amount was 250,000, the cost itself, the revaluation of land has a surplus, and that surplus you need to mention 100,000. And then mention about the accounting treatment. What should we do with the surplus? The surplus should be recognized in other comprehensive income. And if it's under other comprehensive income, if this is your SOPL, and this is your other comprehensive income, that surplus or revaluation surplus should have been included there, not presented but disclosed there as 100,000 in your SOPL right after profit for the year or profit after tax, and that is being credited to the asset revaluation reserve. So this is the journal entry here that will also required from this question. So asset revaluation reserve related to the land, right? The surplus will later be shown in the statement of changes in equity, because equity, part of it is the asset revaluation reserve. And the revalued amount, this is the revalued amount, which is 350,000. This 350,000, which is the fair value, will be shown in the statement of financial position. Okay, that was the answer for that question. Okay, I thank you for watching. I hope that you have learned more than what you expected by watching this video. I hope you will benefit and keep on sharing the wealth. I'll see you, and I will see you. Thank you, and catch me more later in my next video. Assalamualaikum warahmatullah.